All right. Good evening, everyone. How are we? This is very much a late stream for me. To be honest, I wasn't going to do this. I've been out all day. My partner has a sports club, and we've been at a competition today. So literally just got in, and I thought I would jump on here for a brief moment and yeah, just have a little conversation and maybe answer some questions because I didn't get to do this last week. Last week we were still filming for Channel 4. So by the time I got in last Sunday, it was around about this time actually, but it was a long day. It was a long 2 day, well, 3 days actually shooting Friday, Saturday, and Sunday. So I just was not in the right place to jump on. But anyway, let's see what we've got here in the chat. Thank you so much for joining an impromptu one like this. Who have we got? We got Food Dweller. I'm good, mate. How are you? I'm okay. I'm really, really good, actually. Thank you very much for asking. Um, Meg is saying here, if I earn Tempe for my dividends, do I still need to do a self-assessment? No, you don't. Tempe is way below your dividend allowance of about £2,000, so you'll be fine. You'll need to do a return once you cross that 2,000 allowance in dividends, though. Michael is asking here, exploring some clean energy ETFs, found INRG. It says it uses derivatives to hedge against currency risk. Should I be concerned by this? It depends what happens with currencies, really, and what currency they're using to hedge. Um, I would assume that they're hedging either USD or pounds. The USD is probably pretty stable. It depends what currency you also are buying it in. I don't know if you should be concerned, but I would definitely find out a bit more detail. Read the detail of how the hedge actually works. What are they hedging exactly? Because if you're buying it in, say, pounds and you're hedging against the dollar, what's the reason for that, or vice versa? So I'd pay attention to the detail on that, really, to be honest. Uh, okay. Hi, Pete. How you doing? I'm good, Pete. My namesake. Welcome, mate. Appreciate you being here. All right, so let's actually talk about this actually, because the topic of tax. You know what? Since I did a live on Friday talking about this whole tax situation, right? I subsequently did one yesterday on my IG, just talking about how this all works, and it amazes me how there is so much emotion in this conversation around tax, and you can't begin to, I guess, debate the merits of or try to understand something if you're not willing to remove the emotion behind the headline or the way you might be feeling about something, because emotion is quite powerful, right? Emotion can essentially erase all logical thought that you have. Now, like, my personality trait is I'm a logician, right? So, and that is a good and a bad thing. Like, if you look at personality traits and how people perceive things, as a logician, I always seek out reasons for and reasons why, in opposed to an emotive reaction sometimes with things. And so when we talk about things like tax, and I give my opinion, it is based on my experience working in the industry, being around some of these wealthy people. I understand how they think and how the system is set up to enable them to think the way that they think, and the tools that they have available to them, albeit sometimes with loopholes. But one thing I have noticed over the last couple of days is there is so much emotion in this conversation. People feel as though they're being cheated, and I get where that's coming from, but I also don't get where that comes from. Because even when I look back over the polls said very, very clearly that, most people, if they had the opportunity to pay 30 grand to HMRC to save themselves a £1 million tax bill, Most people will take that option. 90% of people said that they actually would. And maybe I was a little bit coy in how I asked that question without providing context. And someone did point that out. And I was like, oh, it's a really good point. But then again, it's like asking you a simple question based on the scenario. Would you do this if you could do this, if this happened? Or if would you do this if this was the outcome? That tells you what people's true intention is. Right now, you could argue that well, if you had more context, you would change your mind. Yeah, absolutely. But in the context of this, where we're talking about tax, and it feels as though somebody is being targeted and crucified in the way that the outrage is leveled against them, and I completely, honestly get it. You have to ask where is that all coming from, to the point that I've had people jumping into my DMs on Instagram, giving me abuse, saying that I'm a tax avoidance apologist and how I've lost touch with reality and you know all this nonsense basically. And it's like, well, clearly you don't know me, but ultimately you've got to respect other people's opinions. Now, the easiest thing to do is to agree to disagree. And I'm not saying that I'm right. I'm not saying that I'm wrong. I simply just share my views on what's going on right now. And my views are informed by my experience working in the industry. That's all it is. You don't have to listen to me. You go find somebody else that you may agree with and follow their content. You go and ask questions that will help you arrive at whatever answer you feel is the right answer for you. People are It's okay to have different opinions about different things. But this tax code loophole, it does need to be removed. It does need to be removed because this is the source and the reason why people feel so much outrage, because wealthy people have this available to them. Now, the sad truth is that you don't get to have access to these kind of loopholes unless you're at that level of wealth. And that's the unfortunate fact. And I think that that's what people are annoyed about. But it doesn't matter how annoyed you get at it or how outraged you feel. It's not going to make any difference to it unless something happens from a political point of view so that the system is changed from a party politics point of view. A lot of people who I've had give me abuse are clearly anti-Tory. And it's like, nowhere in my conversation have I mentioned Tory party, Labour Party, or anything like that. And it's funny how this tax conversation seems to be party specific. And I asked the question, I think I did it on Friday and I definitely did it on Saturday morning on IG. Do you really think that Labour or Green Party or whatever political party will get into 10 Downing Street tomorrow and just change the tax loophole immediately? No. Why? Because they all benefit from said loopholes. So really what you want is you need representation from people who are from a similar background to the people who are feeling the pain right now in order for that to happen. But this is where you get into a sticky wicket, because once you get to that level of, I guess, earnings where you're able to create wealth of your own and accumulate wealth of your own, people are selfish. And that is the fact of the matter. Human beings are selfish. At the core, it is about what is best for you and yours. So when you get there, will you get rid of those tax loopholes? Because you might look at it and think, hang on a second, I might be able to protect myself. I mean, they call it wealth preservation for a reason, right? This is all about psychology and money. Like psychology, money, logical thought, practical thought, pragmatism when it comes to finances. Nobody ever made a financial decision because it was the morally right thing to do, which is the other thing I keep hearing about this conversation in the tax debacle that we're talking about. Oh, she should pay tax because it's the right moral thing to do. Nobody makes a financial decision from a moral position. Most people don't. 99% of people don't. It's all about what's the best for me, what's the best for mine. Is it legal or is it illegal? If you talk about tax evasion, tax avoidance, those kind of schemes, yeah, they can skirt the grey line. Some of them might be a little bit illegal, but when it's written into the tax code where you can actually pay fees, it's not illegal. So have they done anything wrong? No. Is it wrong? Yes. Morally, it's wrong. Absolutely. But at the same time, what do we do about it as people, as general public? Getting outraged and being angry about it isn't going to do anything. The only thing that we can do is apply political pressure, which is the likes of what Gary Stevens always talks about. We have to apply political pressure, which means we have to be involved in politics. We have to vote. We have to demand what we want. Unfortunately, that takes organization. And who's going to lead the charge? There is not a lot of trust in the political system, just like there isn't a lot of trust in the financial system, because it feels as though it's rigged against normal people. And this is where what I do becomes really, really important, or at least I think it's very important, because whilst I can't influence things on the political side, I can share my experience through 16 years of working in an industry, working around these kind of people, to try and share my expertise so that you kind of get a glimpse to how these people basically think and what tools are available to them, so that not that you can, somebody might take it and make a change and I know get involved and be substantive in that regard, but actually it empowers you, because sometimes you can take advantage of some loopholes and tax law privileges as well, especially if you are the kind of person where you're building something where you have the opportunity to do that. But I completely 100% agree. This whole non-dom thing within the tax code needs to be removed. I mean, there are 5 million non-dom registered people. 5 million people. You think it's just her? It's not. There are 4.999 million other people who are doing the exact same thing. And HMRC allow it because it's there in the tax code. So outrage or not, being outraged, giving yourself a heart attack and high blood pressure, and raging at, your mates and having conversations and calling people names and stuff, that's not going to help. It's not going to do anything at all, unfortunately. Can you tell us what the Channel 4 program you are filming and when it's on? I can tell you what it is. I can't tell you when it's out just yet. I have dates, but they haven't been confirmed. So it will be out in maybe 2.5 weeks time, I'm told. But it's going to be on Channel 4. It's called Secret Spenders. So essentially, we basically go into people's homes and have a look at, financial habits, what they spend their money on. We offer help with debt. We offer help with general just planning and managing money, really. It's very, 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 very interesting. We've had a very, very nice, diverse group of people partake in the show, actually, to be fair. And it's nice to have conversations with people, like real people, about what they're doing with their money and how that translates to where they are currently and where they want to go in the future, and how they can actually move towards those things by changing very little things. So I'm on there as the financial expert. So there's three of us. There's me. There's a lady called Anna Whitehouse. Anna, by the way, she is amazing. She's got an epic podcast on Heart Radio. It's massive. It's huge. She's awesome. She's very, very good. She's lovely. And then there's Anita Rani, who's been on TV for a very, 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 very long time. So there's the three of us essentially. And I do the financial bit. Anita is kind of like the host type thing. Then Anna is very, very good at that. What are you buying? How can you save money? How can you do things differently? So it's a really, really nice program. And it's not there to kind of like shame people or kind of make people feel bad about what they're spending. My job, I run 4 coaching sessions with people. And if anyone's had time with me on a coaching session, my sessions normally run 90 minutes. For the show, to get into the detail of it, I think the longest one was about an hour or so, but generally 35, 40 minutes roughly I spend with people really getting into the nooks and cranny of it. Obviously, all of that's not going to end up on the show because it has to be condensed down. But hopefully they'll keep the important bits, the bits that really will kind of like stand out and help the people who were on the show and also who will be watching the show as well. So it will be out in a couple of weeks. I can't announce the date just yet, but once I do have it, I will let everyone know. I do have some behind the scenes as well, which I'm going to post on this channel. I might post it into my Discord group first. If you've not joined the Discord group, definitely go join that. It will be the first link in the description to this video. So I'm going to post it in the Discord group first, and then I'll post it onto the channel. But yeah, I'm really looking forward to it going out. I'm slightly nervous. Um, yeah, but hopefully it goes down well with the general public. And hopefully it's helpful as well. That's the most important thing. This is a good question. Do you think we're going into a recession anytime soon? And would you advise to still invest in global index funds for the long term? That's a good question, mate. I don't know. I mean, obviously, we've got inflation, we've got monetary policy changing quite a bit. There's a lot of stuff going on, mate. I mean, inflation this year is rumored to be 9-10%. And with that, we're going to have to see interest rates move quite significantly in order to combat that inflation number and the pinch that we're going to feel from a financial point of view. Generally speaking, when people feel the squeeze, there's less money that goes into the markets because people need their cash. You know, the money that you're earning currently isn't going as far, so therefore you tend to kind of like scale away from investing in the markets. Same thing applies to retail investors who may have money in the markets, realizing that they're going to need cash. It wouldn't be uncommon for them to then just sell down their investments and hold that money back in case they actually need it. So that could basically run off into a recession, possibly. I think that in those two factors alone won't be enough, but the war with Ukraine and Russia could be a really, really big factor within that as well, because of the knock-on effect it has in terms of supply chains around, obviously, energy, corn, for example, little things like that. It doesn't mean to not invest in index funds for the long term. I think if you are investing for the long term, you should be investing anyway because it's pound cost averaging. If you did go into a recession, essentially what you'll be doing is you'll be buying stocks or buying into the market at a discount price. Let me see if I can get this on and I can actually illustrate this for you just so that it actually makes sense. Give me a second. When I was in Canary Wharf and I was explaining this to clients, I used to draw this graph all the time. And it would make sense once it's down as a visual representation. Right, I need that quick. All right, here we go. Okay. Okay, I've got to send this off, so let's get rid of that. And let's get a new one. Right, let me share my screen, one sec. There it is. All right, okay, cool. You guys can see this, so let's just do a little bit of a draw, right? A drawing. So, expand this out. So you probably heard the concept of like dollar cost averaging or pound cost averaging, right? The idea is that you're buying into the market on a monthly basis at different units. Now, if you think about the markets, and I'm going to use this kind of like XY axis here, and let's just say your long-term vision is 20 years. We're currently here. Now, typically what happens when you're investing in the stock market is you will have a market either go up, right? And it won't be in a straight line, but you'll see a little bit of volatility. What will go up, it will go down, all that kind of stuff, right? That's typically what tends to happen. Now, generally speaking, most people will like the idea of buying on the way up. So you're buying units as the unit prices are increasing. But if you think about it in terms of the actual quantity of what you're buying, well, a unit here, let's just say that's £1 here, and you're spending a pound, you're getting one share for that £1. But if it's gone up 10% to £1.10, well, clearly you're getting less of a share within that picture. And as you keep going up, let's say it's £2 here. If you're spending a pound now, you're not getting a full share anymore. You're buying, a proportion of that because the price is more expensive. Now, the idea of if you're investing over the long term, right, and you see the markets essentially tumble off, right, and let's just say they go down consistently for a very, very long time, if you're still buying into the markets whilst the market is falling, you're getting more for your money because the cost basically goes down each time that you're buying those units. And when you step backwards and you zero out, that downward buying is a good thing because you remember, basic business is you buy low, and what you want to do is you want to sell high, right? So if you buy low and you sell high, well, buying low is the market falling essentially. So you want to be purchasing on the way down, because as the prices now sort of start to recover and go up, everything you've bought within this window right here is more valuable because you bought it at a lower price, which is where you're obviously buying low, you're selling high. Typically speaking, over the long term, we know that markets have historically done very, very well. That isn't to say that markets will repeat the same cycle, but we can look back at it for context. And I think that's the most important part. If this three were to stay true, investing, even within a recession where everything's probably down 10, 15, 20%, means that you're having the opportunity to buy low so that you can sell high a bit later on. And if you're exiting here and you've bought in something, a share at 70p, and it's worth £5 here, that's where you're making the money. So if you are going to be looking at investing, just a couple of things to remember, right? And I know this is boring and I say it all the time, but it is very, very important for everyone to understand this. Your timeline is very, very important. How long you investing for? You should not be doing that if you're investing for anything less than 5 years. If you're investing for 2-3 years because you might need a house deposit, don't even bother. It's too risky. But if you are long term, 10, 15, 20 years, then historical data tells us that it makes sense to invest on a monthly basis regardless of what's happening with the markets. But again, make sure you're comfortable with it. This is not financial advice. I'm just talking you through the theory of how things are supposed to work so that you can make an informed decision from there. I started investing in April last year. I want to diversify with index funds or ETFs. I've given myself 5 years at least. I'm tech heavy in stocks. So do you think VUSA and others to diversify? I mean, look, it will give you some diversification, but you've got to remember that within the VUSA, which is the S&P 500, you've still got quite a lot of tech in there. I mean, tech is the largest sector in the VUSA. So if you're tech heavy right now, I mean, tech stocks are okay, but tech stocks don't typically do well when you've got high inflation. They just don't, because future value is deemed to be, I guess, not as profitable because of inflation as a function. So if you're tech heavy right now and you're going into the VUSA, you're probably going to pick up a lot of the same companies, although you are going to get exposure to other sectors, albeit within the US. So I think you need to run an analysis on that, really, to be honest, mate. If I saw your portfolio and knew exactly what stocks you actually had, you could then run a comparison between what you have and what's in the S&P 500 to know, okay, so what are you going to be duplicating? What does that do for your overall portfolio allocation? So allocation within your portfolio. And again, right, let me just get rid of this and I'll just try and explain what I mean as well so it makes sense. All right, let's clear this. Because ideally, I mean, I talk about balanced portfolios and all this kind of stuff, and people think it's boring. But if you're going to be managing your own investments, it's important for you to kind of understand how this might actually work so you can take some of that into your own considerations when you're building your own portfolio. So let me just spin this way. And I'm going to share this again. All right, so let's just say that this right here is your portfolio, okay? What you're basically saying at the moment is currently you've got a lot of tech within this right here. So it might be that your tech holdings are, let's just say 75%, Okay, that gives you a concentration. You might even have it like 100%, right? But that gives you a massive concentration to tech. So if anything happens in the tech sector where tech stocks essentially fall, you've got 100% of your risk here. Now, the idea of diversification is the idea that essentially what you'll do, just clean this out and up quickly. You're still going to have your portfolio, but what you're going to do is you're going to have sections to your portfolio, right? So where you do have a preference, you might have tech as one of them, but then you might have things like, I don't know. So you might have tech, you might have financials, you might have consumer staples, you might have oh crap, one sec. You might have things like what other sectors are there? You might have energy in here as well. Let's get these colors right. What's going on? You might have energy in here as well. Oh, bollocks. You might have energy in here. You get what I mean, though, right? So you're going to have different areas of the pie. Now, if you go and buy the VUSA, which is essentially the S&P 500, tech is the largest holding within this ETF with Vanguard. So essentially what you want to do is you want to see what the listings for all of the tech companies are in here versus what you've currently got in your portfolio so that you can kind of understand, okay, so if I've got, I don't know, Tesla, Amazon, Facebook, Microsoft within your individual holdings, how much more are you picking up here to give you diversification, proper diversification? Now, obviously, the VUSA also has all these other sectors and more that I've just mentioned, right? So you're going to get wider diversification there. It's all going to be about how much money you have in each of these. So how much is here? How much is here? How much is here? How much is in all of these areas? Because if you've got the majority of your money within tech, then you might want to think about rebalancing or perhaps moving things around and reallocating money to other sectors to make sure that you're fully diversified. I can't comment without actually seeing what you have, to be honest. But that's just a general, I guess, breakdown for you to maybe think about in your approach. But the VUSA is pretty good. It's the S&P 500 at the end of the day, but you will still be picking up tech companies within that. So you just want to make sure that if you're trying to reduce your exposure to tech, that you do it in the right way. And that may mean that you need to reevaluate your actual holdings within whatever stocks you're holding right now and just go in from there to get yourself to a position where you feel comfortable, where you're not overexposed. Where was this question? One sec, guys. I'm just trying to find where I was. Where was I? Where is it? Oh, there it is. Okay, cool. Fraser. Ah, nice. Okay, I like this. I like this question. Hey, Pete, love the channel. Recently had our first child in January. Congrats, mate. Really want to try and set her up financially. Mate, one of the best things you could do is if you set up something like a junior ISA for her, that would be awesome, man. Maybe go and have a look at the video that I did on Tuesday this week. I talk about ISAs and have some FAQs answered in ISAs. I actually covered junior ISAs in there. With the junior ISA, you can save £9,000 per year for your child, which is good. It means that anyone can contribute into it. You can contribute as parents, grandparents can contribute, uncles, aunts, family members, friends can contribute into that account for your child. The only thing to bear in mind is that your child will take ownership of it when they're 18. So, like I said in that video, it's just really important for you to make sure that you have that money conversation with her or him to make sure that they're aware that they've got money coming and they use it responsibly. Because that is the biggest fear for a lot of parents. It's like, well, if I go and save all this money for my kid, how do I know that they're going to be responsible when they actually get hold of the money? That's going to be that's the challenge for most parents, right? And that's why it's really important to have conversations with your kids around the value of money and the importance of money. You could also do like child pensions, that kind of stuff. I mean, that's more long term, but that can make a huge difference as well. But maybe consider junior ISA is a good place to start. So maybe have a little look at the video on Tuesday. There are lots of providers who offer them, and maybe dig in and see what you think of it from there, mate. But thanks for the question, bud. Videos to view, thank you. Good to see you, mate. Let's have a look at this. I think it's all about principle, especially when and this is going back to the tax question. I would completely agree. I would completely, utterly agree. But at the same time, like, I play devil's advocate all the time because I know how people think when it comes to money. Like, you principle, the ideal principle, yeah, it is idyllic in a way, but people don't make financial decisions based on what is the morally right thing to do. Nobody does. I mean, can you say that you've made a financial decision because you have a moral position that you believe in, and that's dictated how you spend your money, what you invest in, so on and so forth? For a lot of people, those aren't the main drivers. And people seem to think that because people are wealthy, that they think differently. They don't. If anything, they think in the opposite of, well, maybe not the opposite of moral, but then let's put it this way: they're more aware of the fact that they have wealth and they want to protect it. So if that means using tax loopholes, that's what they do. They just do. It's the reality. I mean, I don't know. People can be outraged all they want, but that is the reality of what happens. And the sad fact of the matter is that most people who get to those levels, when they get there, because they know that it's taken a huge effort to get there, they all think the same. They all try and take advantage of all of those things. It's just the reality of the way things are. And again, that's the question of who's going to be the person who's going to close those loopholes. I don't know. I have no idea who would do it. But that's just the sad reality of the world that we live in. You know, yeah. Thank you for this, Omo. Thank you very, very much. Appreciate it. Let's have a look at this from 0161. Please explain what market makers are and their daily roles in the ETF game. Do they provide liquidity and keep values close to net? Who are authorized participants and the creation/redemption mechanism? Right, we're going to go into like the weeds there. I mean, look, the market makers are generally regarded as like the big banks, the guys who have huge volumes, that if they were to invest something, you see a notable change in the share price of a company, right? So if you think about, price action where you've got massive volumes, like 5 billion going in, that's going to move a share price. Some companies and some shares are harder to move than others, particularly if you're looking at the likes of, Amazon or something like that with a huge share price. It can be hard. But for companies that aren't valued and don't have the valuations like that, the market makers are essentially the guys who really have the power to push the share prices. And look, you're talking more trading here than investing, and investing is my game, not trading. But typically within a trading point of view, these will be the people who they'll have game strategies. They'll have like trading strategies on a day. They would have done their research and they would have been like, okay, based on the research, we feel that this company is a really, really good deal. If we did this is what we expect. Or, for example, we've uncovered that this is going on with this stock, we're going to short it. And they use the volumes behind them to basically move the markets. It's a little bit more intricate than that, but like I said, that is more of a trading thing. I don't trade. My game is investing. And those two things are very, very different. Like, investing is like you're getting married, you want to wife up and have kids. Trading is like your one night stands. Completely different. They're confused these days because people use those terms interchangeably, but they're two different things. The main market movers, the market makers, generally operate within the trading game, which will be equities, it will be forex even. You'll have them operating in there. Anything that can move quite quickly on price actions on a day-to-day basis or over a period of time if their trading strategy is to move and take positions that will be I don't know, a week, 2 weeks, a month, maybe 2 or 3 months. Sometimes it really depends on what they're looking at and what research they have in terms of the positions that they basically take. This is an interesting one. Maybe elaborate on this for me, Kenroy. Don't think getting rid of it makes sense. If CR7 makes endorsements in other countries, surely he shouldn't pay UK tax on that. No overseas celebs. Right, okay, listen. Huh. I love this. I absolutely love this. Right, now, the conversation of tax is an extremely complex one, okay? And this is the thing that the tabloid headlines don't really cover. And to a certain extent, we need not be naive, right? Because there is an element of naive and reactiveness and emotion. That's what the headline is designed to do. It's there to whip up emotion. But this is a prime example, right? So I just said earlier that there are around about 5 million non-DOMs, right? Non-DOM registered people here in the UK. That will include people like all of the footballers, may potentially, right? Who are foreign nationals because they're not domiciled. You have to understand what domicile is to start with, and then the tax laws and the tax allowances within that law that apply to those people. Now, if I said to someone, okay, look, so for example, my parents are Nigerian, so I could have dual citizenship with Nigeria, right? Technically speaking, my parents are Nigerian, so technically speaking, I could say, well, actually, my domicile could be Nigerian, but it's not, right? But let's just say that it was. Now, let's just say that my domicile is Nigerian. I pay UK tax on all of my income, but I've got 2 million, 3 million quid in Nigeria where I'm paying tax over there. Do I want to be double taxed? Probably not. Now, the question of whether I'm in the public eye or associated with someone in the public eye, that doesn't come into my decision as to whether I want to be double taxed on assets that I've built up. This is an extremely complex tax situation. You, as a normal person, probably wouldn't want to be double taxed on anything. Why would someone who's wealthy want to be double taxed? Or in some cases, triple taxed? Why? It doesn't make sense. This is why I keep talking about the fact that people talk about moral. It's not about moral values for a lot of these people when they're making these decisions. You can't begrudge someone for making a financial decision that makes sense for them. So essentially, what we're asking is, you need to register as a UK domicile, which means she'll be paying taxes in India, she'll be paying taxes here in the UK. That's double taxation. Now, I'm not saying that what she's done is right. Don't get me wrong, because I got a load of abuse on Instagram, today. People saying that I'm a shill and all this kind of stuff. I'm just trying to explain it for what it is. Most people don't want to be double taxed. You wouldn't want to be double taxed. So you can't expect that these people are going to make a decision just because it's the right thing to do for the UK economy. And in the perception of the general public, they're going to look better. They don't care. They honestly do not care. Do you really think she cares about the fact that, people think that she's, I guess, what? I don't even know what people are calling now, right? But obviously, a lot of unpleasant names and unpleasant labels. Do you think that she cares? Probably not. She's obviously volunteered to say she'll pay some now. She's only doing that out of the fact that she's got such backlash now. And unfortunately, when you get into regions of an entire nation hating you, I mean, come on, like, I don't know. I just think this outrage that we feel, I completely get it, but you cannot expect people to make a decision that is going to hurt them or they perceive will hurt them from a financial point of view. And it's not about the number or the money that they have. It's not about that. It doesn't make financial sense to make those kind of decisions. You can't expect somebody to make those decisions just because we're all outraged. We just can't, unfortunately. Yep, this is a good one here. All right, so I do want to speak about this actually. So look, we're all outraged about this whole taxation thing, right? But let's be completely 100% honest and be clear on what's going to happen over the next 12 months. Wealthy people are going to make an absolute killing in the next 12 months. Guarantee you. And we would have been too busy talking about all of this tax situation because when the cost of living goes up, guess what? Energy bosses, people who have huge stakes in these energy companies, when they announce their profits next year, would have made millions. Then we're going to be outraged about that. So it's from outrage to outrage to outrage. Basically, that's what it's going to be. And I get why people would be outraged. Yeah, you should be outraged. But, you know, what are we going to do about it? We have to address the root cause. And I don't have the answer to that root cause. I just don't, unfortunately. I'm just saying we need to acknowledge that this stuff is happening, but we all maybe collectively need to have a conversation about okay, how the hell do we go about changing this? Because this is absolute nonsense. I don't have the answer to it, but this is the reality of the world that we live in. Good. This is good. Someone's saying here they dollar cost average into on 100 firms in fractions, safe and ready. Now, good. Look, if you're buying on the down, it's great because when things go back up again, you see a little bit of profit. Could Rishi win back favor if he were to remove stamp duty for first-time buyers? No, I don't think that's going to be. Look, seriously, that's asking for a bribe. Essentially, will he do that? Probably not. I mean, at the end of the day, you're always going to have somebody who's going to complain, right? So he'll be making first-time buyers happy, but he's going to have other people moan about that specifically for whatever reason. Like you can't you, you almost can't win because it's impossible to make everybody happy. If he did it though, I think it would be great if he actually did that. I think a better thing that he could do in addition to that is he could actually increase the house price limits on things like lifetime ISAs. Because like in London, it's £450,000, but you try getting a place in London if you're on your own for £450,000, like especially if you want a decent place. I think you could increase those limits. I think that would be great. That would be a good place to start as well, in addition to the stamp duty. But I doubt very much that he's going to start reducing tax things just to win back favor. I mean, he might, but I don't know. I think it would just be a little. People will be able to see through it, and he'll get backlash because now you're trying to appease the public. You can't please everyone. Do I have a video on companies that give employees restricted stock unit? I don't. I can have a look at doing something though. So yeah, leave that one with me. hmm Someone's saying in here that there are sector specific ETFs that you can purchase. So in that prior example, that might be a good option. But again, you just need to make sure that you're doing your homework in terms of, you know, if you want true diversification, that means that you've then got to go and find maybe five other ETFs for five other sectors. And then when you're doing different ETFs, obviously the price racks up in terms of what you're paying. So if you can get them in one, that will probably be more cost effective. But it is something potentially to have a look at. Yes, if you haven't already, please hit the like button. That would be very much appreciated. Um, oh, dude, whoever put this, there you go. See this right here? That would be a start. I mean, it's not as bad here in the UK as it is in the US. I mean, in the US, it's terrible in the US. I mean, the lobbyists own the government. They write policies and stuff. It's not as bad here in the UK, although there are lobbyists. You stop that to start with, you'll get somewhere 100%. That's a great suggestion. Yes, I'm going to have a look for yours now. I did cover yours a little bit earlier on. I think you asked a question right at the top. I don't know whether you were here or not. Let me just go back and see if I can actually find it. Yeah, because you asked about the Channel 4 program, and I have answered that. I don't know if there's another one in here that I've missed, maybe. Let me know if there is. Yeah, let me know if there is, and I can double back to it. But that's the only one that I could see from you. I'm just trying to find where I was again because I've got to go all the way back down. Here we go. Edna, I am good. Thank you. Hope you're well. Like button smashed. Thank you. Thank you very much. Okay. Look, there aren't any other sort of questions on here that I can see. Um, yeah, there aren't any other questions on here that I can see for the time being. But I appreciate you guys being here on a Sunday evening and stuff. This is a little bit of a late one. Like I said, I just jumped on getting through the door. So yeah, look, everything that's going on right now, I think we just need to be a little, I don't know, education and knowing topics and knowing, I guess, the context and how things work is an important factor when we're having a look at here at topics like taxation and all this kind of stuff. I'm not anybody's boss to, you know, to tell people what to do in any way, shape, or form. Like, you know, it's your money, your mind. You do whatever you want. It's nothing to do with me. And at the end of the day, you know, your decisions don't impact me at all. Same as my decisions don't impact you. But I do think that it's really really important to try and seek all sides of the conversation. My mind naturally does that because my personality trait is. Um, I'm a logician, so I always seek out facts and logic in whenever I come across anything, to the annoyance of people who know me, because I'm always like, why? But that doesn't make any sense. I can't just go or off a spontaneous thing without, like, what are we doing? Why are we doing this? That kind of stuff. I'm just naturally inquisitive in that way. And when I share my opinions, obviously they are my opinions enforced by my experience. That doesn't mean that you should go and take it verbatim in any way, shape, or form. That's not what I'm here for. I'm not here to be an encyclopedia for people to essentially copy. That's not what I'm here for. It's called conversation of money because it leads to a conversation that hopefully leads to a deeper understanding so that people can make their own decisions. That's essentially what it's all about. Um, right, okay, 1 second. So I can see this, but I can't see your comment above. Even in the chat on YouTube, the comment above is from Food Dweller, and this is the comment above here. It says, I'm good, thanks, and that's speaking to Edna. There is this one, which is a question about Berkshire Hathaway, I believe. Would you consider Berkshire Hathaway be an ETF or a stock? Are you asking about the individual stock or an ETF? Well, look, buying an ETF and buying a stock are two different things. ETFs gives you more diversification. Like if you're buying Berkshire Hathaway Class B shares, then you're buying that one share. So it's a completely they're two different things. They're apples and pears, mate. So there's a lot of analysis that goes into that that decision specifically. But that's the question above that. The other question above that is Edna's one. So I can't see the comment that you're referencing here because there is nothing above it that I can see. I can see this one here. Thoughts on 4% rule for retirement using a defined contribution pension. It's a good place to start. The reason why they do that is because they try to factor in how much you need to make considering inflation. Now, probably not the most accurate thing to use right now with inflation at stupid amounts. I mean, that's assuming that inflation is at 2%, right? So 4% withdrawal means that if inflation is at 2%, you're making more money to be able to keep up with inflation and some profit so that you can take income without really beginning to erode your capital. That number won't work if we have really, really high inflation, but it is a good calculation to start with. It's not perfect by any means, but it is a good number to start with. There are a lot of other variables when it comes to retirement planning and amassing a sum of money, because it's all about how far into the future you're looking. If you're looking 15 years into the future, it's all very well and good assuming that inflation is going to be 2 or 3%. But if it is actually 6 or 7%, then your level of contribution into that pension needs to be a whole lot more, because inflation reduces your purchasing power in the future. So it's a good place to start, but I would take it with a pinch of salt as a starting point. Hey Pete, looking forward to seeing you on the TV so I can be all smug and think I watched that guy's videos. Nah, cheers, mate. I appreciate it. Mate, it's been a really, really, really great experience. It really, really has. I'm excited to see what happens and how it turns out. Actually, I got sent some of the VT footage that is going to be used in the show. I've got to do a little bit of work for that. It looks really, really cool, but like I said, I'm a logician. So when I look at things, I'm like, I could have done that better. I analyze things quite a bit. I'm very, very self-critical in that way. But yeah, it should be cool. I'm really, really looking forward to it, and it'll be great to hear your guys' feedback as well when you do watch it. Thank you. Yes, there was another question near the beginning. Okay, cool. Right, bear me 1 second. So I could only see your one question about the show. After that, so let me just go and show you a run of the questions that I have at the top. So where are we? This is the very, very first comment that came in. Then I've got Meg's, who I answered there. I had Michael's question, which came in here. And then yours was here. Then right after that, I've got Food Dweller. And then I had Alex as well. And then it was Duncan. I don't have anything in the question log past that, unfortunately. Yeah, I just don't have it. Yeah, I don't know. I don't have any filters for the chat, so I don't know. I mean, there are filters for the comment section on the videos because I don't allow people to like post like crypto scams and stuff on there. So I really don't know what's going on, guys. I maybe need to have a look into this and see if I can see if there's something in the settings that I need to tweak. I need to get it. Is there a link for the Channel 4 episodes? Not yet. There will be a link when it goes out. But like I said, I think I know what date it is, but I don't know for sure just yet. So once I've got confirmation of when the date when it's going to go out, then I can announce and provide the links on there. I don't have it here. I don't have it. Are you on Instagram? If you're on Instagram, ping me a DM on Instagram right now, and I'll grab it off Instagram. I don't know what's going on with the comments. I don't know why it would be disappearing and not showing up. I'll have to have a look at the settings to be sure. Yeah, Edna's saying that she's been looking for her for the question, but it's not there. Yeah, ping me your question in the DMs on Instagram, and I'll pick it up right now and answer it. Yeah, same thing with water. So no one can see it. I can't see it. Nobody can see it. So ping it to me in. Let's have a look. Have you just done that now? Okay, that's not the. Yeah. Mm, I don't know. I've got to have a look at the settings. Maybe there is a filter on here. I'm not sure. I definitely haven't set one up as far as I'm aware though. But yeah, if you can ping it to me, I'll have a look at it, look into it. There's there's a United question here. Um, yeah, because all the comments, it's not just about it coming through to me. Everyone will be able to see it. I mean, I can see, when messages are retracted, but yeah. United question. Would you be happy with the Ten Hag as your to have Ten Hag as your next manager? Um, yes, certainly over Pochettino. I think we should have gone for Conte when he was available, but United is United at the end of the day. To be fair, mate, that whole team, that whole club needs a massive, massive overhaul. I mean, Ten Hag, he's got his work cut out for him, and it's crazy, really. I don't know, losing to Everton, like, not to be disrespectful to Everton, but like I think De Gea said it best yesterday. It's disgraceful. A team with that much talent in it, and you don't create anything. There doesn't feel like there's any desire. There's something fundamentally wrong in that dressing room, fundamentally, and I just think you have a ton of people who are just really, really wealthy. They go home, they're quite comfortable, they can have whatever they want, buy whatever they want. You need motivation to really be good at what you do, and money isn't enough sometimes. If anything, certainly at that level, money can make you complacent. Like, what are you doing this for? You're set, so why drive forward? I don't know, mate. It needs a whole new overhaul. But then there's crazy money in football now. I mean, they're talking about Mo Salah. His new contract. He's asking for £500,000 a week. It's 2 million a month. Like, how do we get to these dizzy heights? It's ridiculous, mate. Shortly, we're going to see the first £1 million a week footballer. Like, that's not going to be far off. It's absolutely insane. And if you're getting paid £1 million a week, well, let's £500,000 a week. Honestly, there has to be something special about you to really want to get up, bust your gut every day for a cause. I mean, mindset at that point is so key, and I just don't think they have the mindset right when it comes to the squad at United. I really, really don't. And yeah, he's got his work cut out. I just think they should just get rid of the whole lot of them, really, to be honest, and just go and get youngsters who are hungry. And yes, it's going to take time for you to build it, but I think young kids who have something to prove, they'll probably bust the gut more. They won't be consistent. You probably won't win anything for a very long time, but at least you'll get that core, that bit of desire, that hunger, that willingness to prove and be that superstar that they've watched for many, many years. I don't know, but I'm not a football expert, so who knows. I don't know what that is. What is that? I have no idea. Thanks, mate. I appreciate this. I really, really do. um yeah, that makes it hard. That makes it all the worthwhile. Look, I do have some potential changes coming a bit later on in the year. I've had a lot of time to think of it. Well, because obviously I spent so much time filming for Channel 4, it really messed up my schedule. And I realized that actually I'm maybe doing a little bit too much, especially when it comes to trying to get balance in what I do on a weekly and daily basis. 2 videos a week is a lot. I think maybe through the rest of the year I'm going to go down to one. Um, I need to get some more time back to be able to, like, maybe just enjoy some of the things that life outside of working, basically. Um, I was having a conversation with my missus and a friend of mine about this. If someone asks me what my hobbies are, I don't have any hobbies. My hobby is working, and that's not really healthy, and that causes problems. But then again, I know why working is my hobby. I mean, if you think about hobbies, you get hobbies when you're a kid. You get encouraged to play sport. You get encouraged to do something extracurricular that gives you, I guess, enjoyment and well, it's enjoyment, isn't it? When you're a kid, I didn't have that. I didn't have that at all. Um, when I was 16, I was writing adverts for UNICEF trying to make money. I was I was writing projects for the likes of university campuses trying to make money, trying to get out of Nigeria, trying to do something different. And so I never had time to I was always thinking about progressing, doing something different. So I need to try and rectify that because work isn't really working for me, if that makes any sense. I need time to travel and spend time with my partner and stuff and maybe find a little bit more balance. And obviously being self-employed, producing things here on YouTube, that's full on. It's proper full on. And if I think about the time and the effort that goes into producing things on YouTube, if I look at it from a purely business point of view, the views are not worth it at all. I would be operating at a loss. It's simply things. Not actually, I've forgotten to put their logo on here. It's things like companies like Wealthify coming along, right, and supporting the channel that keeps this thing afloat. If it's simply on views, no, I'd be underwater. And I have to look at that from a pragmatic point of view and think about, look, the time that I put in and the value that I put out, do I get enough back? I don't promote my course. I don't promote a lot of my services. I don't speak about them anywhere near enough because I could be better at, I guess, treating this more like a hard, cold business. But that's not what I'm about. I'm not about pushing people to buy things from me unnecessarily, although there needs to be an element of that, which is the bit that I'm not really good at. Um, so yeah, it's really nice to hear these kind of comments. I mean, with everything that I'm doing YouTube videos twice a week. I'm doing a podcast once a week. I'm also doing the monthly magazine now. It is a lot. It's a lot of stuff. And so I need to scale back some of the things that I am doing just to give myself a little bit more balance and at least try to make sense of, how do I get a few hobbies and things that I might be able to enjoy and, provide even more value to the channel. And what that might mean is that the videos will kind of change later on this year. And you will notice it. You'll probably notice it in the next maybe 2 to 3 weeks once we start get going with BTS and stuff like that. But yeah, things will change. It will look very, very differently, and the frequency might be a little bit less. And yeah, I don't know what's going to happen with these live Q&As. I want to continue to do these, but you got to think about the fact that this is a Sunday evening, 9:30. My partner's upstairs. I could be spending this time with her, and for the life of her, she gets why I do this, but at the same time, she's like, we should be spending time together. So it's balance. Does this make me money? No, it doesn't. It doesn't at all in any way, shape, or form. I do this because I enjoy doing it. So I need to find the balance between doing this because I enjoy it, but also trying to get life at home perfect, and also balancing out the fact that actually I do also need to keep the lights on. Very, very tricky to do. I haven't quite figured it out just yet, but I guess I will at some point. Uh, I've just got your question through. 1 second, Pete. Okay, so you're asking what the best app for buying and holding Bitcoin. I've downloaded and signed up to Coinbase app. Is that a good one? Coinbase is good. If you're using just the normal Coinbase one, the charges can be quite high. Um, for ease, for me, because I've got some individual stocks and I can buy ETFs in there, I use eToro personally. It's probably not the best one to use. but that's what I use. But Coinbase is a good one that you could use. Who else could you use? I mean, you can have a look at the likes of Kraken and Binance, but I think that's really more if you're trading. If you're trying to buy and hold, Coinbase will do well. Coinbase will do pretty good, but just be mindful of the fact that it's not the cheapest one out there. All right, let me just scan these. One sec. Okay, this is an interesting one. Regarding R&D, how is it different than Italy, which caps capital gains tax at 100k, or no tax havens like Dubai? Every country has tax rules that appeal to some and frustrate others. What do you mean by R&D, mate? That's an abbreviation. What do you mean by R&D? Let me know what you mean by R&D. I think you're talking about tax there. I mean, there are when you say R&D, I mean that for me says research and development, which there are tax allowances for research and development if you are like a corporate company. But I just want to know, are you talking about that specifically? Conversation of football. I don't know, mate. I think you've got the likes of like Mark Goldbridge on United Stand and all that kind of stuff to compete with. That's a big competitor, mate. I don't know. I don't know. To be honest, I don't really know too much about football. But then with football, it's great because like when you watch it's very opinion based. It's very very opinion based. People get very very passionate about football. I don't know. We'll see. Okay, I'm looking for a fund for life that I would like to pay into with Vanguard for the next 20 plus years. Any suggestions? I looked at the FTSE Global All Cap, but I'm interested to hear options. I can't give you specific ones or suggest specific ones because that will be deemed as advice, and I can't do that. But have a look at globally diversified ones. Pay attention to where it's invested, the number of companies invested, and obviously cost. Pay attention to that. Then have a look at the sectors, that kind of stuff as well. Just remember though, when you're looking at the ETFs and index funds on Vanguard, like it's all equity exposure. There is no bond or alternative um, asset classes within that. So you should definitely bear that in mind. But have a look at the global ones first, because global will mean that you're getting invested across different countries and territories. And then in that, you're going to also be invested in different sectors. I think that might be a good place for you to start. UK brokers for UK shares long term. If you're looking at the best cost, I think you're probably going to be looking at maybe the likes of Free Trade is probably the front runner that I would think of. Um, Stake is US only. Yeah, they don't have UK. Um, I was going to say Orca. I think maybe Free Trade will probably be the best one for you. For UK, yeah, Free Trade will be the one that I'd probably choose. Where it's low cost. I mean, you have to pay for obviously £3 a month for the ISA account, and then to have access to the full suite of ETFs, you got to pay. I think it's like 9.99 or something like that. But you can choose which ones you want. But off the top of my head, if you're looking at cost, then Free Trade is probably hands down the one that you would that might be the best fit there. Nice. See, 20 years as a designer. That's a lot. What do you design, mate? I'd be interested to know what do you actually design? Because that designer moniker is quite it can be quite varied in terms of what you actually design. Is it fashion? What is it? Art? What is it that you do? But having done it for 20 years, and you mentioned something here that's really, really important. It's your hobby, so it doesn't actually feel like work. I think that's the balance that a lot of people struggle to find. And I've got a friend of mine who's obviously in music, and whilst he loves it because that's, I guess he was born to do it. He can't, I can't even see him doing anything else, and it is very much his hobby since he was a kid, essentially. And I guess that's kind of like the luxury of it all. If you can find a hobby to turn into a profession, like that's the holy grail for a lot of people. A lot of people don't actually get there, you know. Is it worth paying off student loan? Plan one first before investing. No, don't worry about, mate. Listen, your student loan, it doesn't impact your credit score. It doesn't impact your ability to go and get a mortgage in the future. It does nothing at all. You're going to get taxed at source before it even hits your bank account. So, and if you don't pay it off over a period of time, the balance gets written off. So don't worry about your student loan, mate. You can start investing without having to pay off your student loan. I would argue that the money that you would use to pay off your student loan is better off going into the stock market anyway. For sure. For sure, for sure, for sure. A lot of people are worried about student loans, and I just generally just say don't worry about it. I know that from a psychological point of view, it can feel like a massive, massive burden, and it is. I completely get that, but it doesn't hinder you in any way, shape, or form for the important stuff that you're going to need to do in life. You know, buying a house, investing. It doesn't impact you whatsoever. So yeah, nice. Okay, graphic and digital design, graphic design and digital design. Hmm. Are you on Instagram, Adam? Let me know if you're on Instagram, mate. I would love to be able to see your work, actually, especially if you're in the graphic design arena. Yeah. Let me know if you're on Instagram, mate. If you are, would you mind just DMing me? Because I've got a couple of things that I'm looking at the moment. So yeah, if you could DM me, that would be great, mate. Cheers for that. Okay, cool, guys. An hour 14 minutes. I've still got to do a little bit of work for the podcast for tomorrow morning. So I appreciate you joining me. Thank you so much. We're going to do a live on Tuesday. There's a lot of stuff that's been happening in the crypto space. I've not really caught up to it as much as I should because I've just been busy. But there's a lot of institutional stuff going on with Bitcoin and crypto in general. So I'm going to have Ralik on Tuesday evening for a live session, fingers crossed, to talk about that specifically. So I'll see you on Tuesday evening, 5 p.m. But guys, thanks for joining me this Sunday evening. Have an amazing week. I will catch you later on.